I think when you parse through, this is interesting. It's the headline hit, and you got the weaker headline, 143,000 market for 30 seconds rallied, and then as you actually dig into it, you see that the unemployment rate came down, average hourly earnings were up, and then you go deeper and you look at, gosh, for the 3-month moving average of jobs hired is 237,000. That's up from 178,000 over 6 months. So when you put it all together, it's like, boy, it's hard to debate that you've got a solid employment report. There's some other indicators and jolts and otherwise that show maybe some modest softening, but boy, you got to look really closely to see it. You got a solid jobs market, and I think rates market has, like you said, has rallied a bit, interpreting that maybe the Fed can get these cuts in. But listen, I don't think the Fed's going to cut anytime soon. You got labor in a good spot, you got inflation that's far from target and not really decelerating. So I think what the market's telling you is we're on hold at the Fed for an extended period of time, right? And so that backup after a pretty good rally, markets are rightfully backing up in the rate space.
Rick, good morning to you. Good to see you. So this gives the Fed a beautiful air cover to deliver the caution, to hold on to the cautious narrative. I want to dig deeper into the 40 basis point drop since the middle of February, down for 4 weeks in a row. Why?
So I'd say there's a couple things at play. One, the world was worried about big tariffs coming in, big across the board. I still think you're going to see across the board tariffs, maybe not as potent. So there was a little bit of easing off of that. Secondly, I think one thing that, first of all, I think a lot of people got short, and you saw this in all the indicators. We saw in the technicals that there were some short positions that had to be covered. And then, listen, at the end of the day, there's something that we haven't seen in a generation, the amount of cash that's out there and the amount of money. If you see this in the equity market, you see this in the bond market. Without a catalyzing piece of news that suggests, gosh, we need to reduce some risk or interest rate risk, you see a market. By the way, you saw in the equity market for those 2 Mondays where you saw some pretty potent downturn. And then, as things move on, that cash starts to make its way in. We're seeing it in flows around, particularly in income, that people are putting money to work, and it's just a market flush. I mean, the system is flush with money, and then if you don't get anything that suggests taking money out or being cautious, I think you see markets gravitate higher.